Hello, this is Lance Zimmerman and welcome to the CattleFax Closing Bell for Friday, May 6th. Today's top story, forecasting beef demand for 2011 and beyond. There are a variety of components that go into determining beef demand and its resulting influence on cattle prices. Many of those factors remain unknown, but the similarities between 2011 and past years are worth considering as we look ahead. Fed cattle prices this spring advanced to highs well beyond recent trading ranges. There were only 2 times in recent history that the market reached highs this rapidly, and that was in 1978 and 2003. In each instance, these market highs defined new and higher trading ranges for fed cattle. If fed cattle prices average $113 this year, the beef cutout will likely be around $182. Based on what we know about existing cattle and beef supplies, these prices translate to a 12% annual demand increase compared to 2010. We are facing a feeder and calf supply outside of feedlots that's nearly 1 million head smaller than a year ago, and beef cow operations of all sizes have declined every year since 2007. Those numbers would suggest lower cattle supplies for at least the next 2 years. Let's assume the smaller cattle supplies translate to a 1 pound per year decline in per capita beef supplies for 2012 and 2013. If supplies follow that trend and prices remain the same as 2011, wholesale beef demand would actually decline around 4% in each of those years. As mentioned earlier, a lot of dynamics are at play when it comes to determining supply, demand, and the resulting market prices. However, this is nearly the same scenario that played out in the late 1970s and early 80s, when new market highs were met with lower supplies the following 2 years. Rising unemployment, cheaper protein alternatives, and higher energy prices will likely challenge domestic beef prices in 2011. Increased trade in late 2010 and early 2011 boosted U.S. beef demand and will continue to be supportive of these prices going forward. These demand effects, and the current supply situation outlined earlier, will be better understood as the year progresses. Current U.S. cattle supplies suggest herd expansion. However, beef demand has the potential to keep prices below recent highs for the foreseeable future. Individual herd expansion decisions need to consider ranch management costs in light of these potential dynamics. Now, for your weekly market summary. The Fed market continued to follow a seasonal decline with cash sales $1 to $2 lower on moderate volume. The futures market trended lower as well, with open interest following a similar decline. Fed cattle traded in the north at $115 to $116 live and $185 dressed, while cattle in the south traded at $114 to mostly $115 live. Lower-end meat prices and weaker loin purchases led to a lower boxed beef cutout. Choice beef dropped nearly $5, while select was down $4. Feeder cattle prices were mixed, as values started the week stronger but ended weaker. Feeder cow futures for the fall are currently trading around $132. Corn prices have been volatile as the market reacts to planting progress and general economic conditions. Old crop contracts were down around 20 cents lower, and new crop was up around 20 cents as well. Thanks for watching, and be sure to visit CattleFax.com for your latest market news and analysis.